Turn her off on right.
So I'm Nicholas Petros of Capital Link, and I would like to welcome you to yet another panel. This panel is the American panel, except for Petros, who is in Athens. Everybody else is in the United States, and we are delighted and honored to have with us three very important Greek-American businessmen who enjoy global recognition and respect. And thank you, Petros, for moderating this panel. So without any more delay, I would like to thank all of you for joining. I'd like to thank the delegates. So far, it has been a great day. And I will turn the floor over to Petros.
Thank you, Nicholas. Thank you very much. It's really a great honor and a pleasure to have three distinguished guests today in our panel. I need to make a very brief introduction because all of you know them, and all of them are extremely well known in Greece and highly respected for their career paths and for what they have done and for how they have created their own empires through their personal hard work and very successful moves. So I'm really honored to have them in our panel. And actually, we're going to discuss about the post-COVID-19 landscape and how the market will develop in the months to come, especially in the food sector, the real estate and energy. All of them have exposures in the real economy. And John Calamos is one of the most highly respected fund managers and investment managers with a listed company with a track record which is amazing, definitely. And John also has exposure in real estate, I think in Chicago or elsewhere, also in the United States. John Catsimatidis, I think all of us know him very well. I think that all of us want to ask him if he's going to run for mayor again, but it's something that we'll do later on. I don't know if he will open his cards tonight. Okay, today. So John is also a self-made entrepreneur and businessman. He has done tremendous things in the food sector, but also he has a major exposure in the energy sector, in oil refineries, and in bio fuels, also in real estate, in commercial real estate, residential real estate. I mean, amazing things, and definitely he has a tremendous insight of the market. Dean Metropoulos is, of course, somebody who all of us know and highly respect. He's extremely involved in the food sector with hundreds of household brands in his portfolio. Also luxury residential real estate in Florida, as far as I understand, and iconic real estate in New York. Is it correct, Dean?
Yes.
So let's start our discussion, our panel discussion about the new era, the post-COVID era. What is your understanding of the situation? Is it going to be something that will be the doomsday or the perfect storm or the disaster or the game changer, or it is something, a normal crisis that will pass and it will be a change agent for the companies?
And are you addressing that to me, Petros?
Yeah.
Yes. Listen, I think it's still a fairly uncertain environment as to whether we're going to get another spike in the COVID-19 going forward in the fall. That's what the doctors are saying. And I think clearly the economies are opening up around the world and certainly in the US, and I think that's important. But certain basic steps of masks and certain social distancing, I think, are important. Having said that, I think the markets are all telling us that with the incredible investment that both the European ECB and as well as the Treasury here in the US, as well as the Federal Reserve, trillions of dollars are being pumped into these economies to carry us through till such time as we get some vaccines and other medications, which I think everybody's fairly optimistic about. And to the credit of the pharmaceutical world, there's a lot of cooperation between pharmaceutical companies, universities, et cetera. So I think solutions are in the distance, and you can see them. And in the meantime, we're going to have to traverse, a lot of uncertainty for the next several months. At the same time, a lot of people are saying most people, 99+% of the population, may get the disease, but it will not be, terminal. So I think in general, people, with all the funding that's pumping into these economies, with the vaccines that are coming, I think the world seems to be going back to normal, although I think there'll still be quite a few deaths and cases between now and October, November.
And John Calamos, if you would give a letter in the shape of this crisis, what letter would be?
Oh, it does seem.
Shape, L shape, what?
What?
W
Are
shape.
you talking about the recovery? Is it shape? Is it W shape?
Yeah.
It is an uncertainty. It does look much more V shape. It's obviously it's come back good in here. The markets are a bit more positive. I think a bit sideways in here. But it seems like we got over the shutdown, and now 35% of the economy is reopened. Here in Chicago, the restaurants and everything will be open this Friday. So that's all a positive, and it's really this has really been detrimental to small businesses and things like that. So we need to get the economy going again. That's really important. And as Dean pointed out, the massive funding by the ECB and by the federal government here in the U.S. Has been positive to try and help people through this crisis, because this is unlike any other kind of recession we've had, where it's an economic recession coming back, and this has not. This economic crisis has been caused by the pandemic, which is very different here. So that's, I think the fear I have looking forward here is a geopolitical risk out there.
Yeah.
There's an old saying we learned, trying to manage people, culture trumps strategy every time. And the culture is really making me very nervous in here. It's really unlikely, and I think that's really critical going forward. We've had the strongest economy we've ever seen here in the U.S., people working and all that, and to see that culture just kind of undermine that is very disturbing to me. I've never seen, I've been doing this since the 60s. I haven't seen anything like this.
John Catsimatidis, how you see the situation now in the U.S.? And
you have three major markets. You have the United States, you have Europe, you have Asia. So the question is, there's $5 trillion on the sidelines right now. Where do those $5 trillion go? Well, the safest place in the world, I think, is the United States of America. I certainly would not put a lot of money into Europe because they're just going nowhere. I would not put into my money in Asia because you might as well go to the casino. You never can trust the numbers, and I'm sure Dean Metropoulos, who worked on deals all over the world, when we worked on deals in Asia, I don't care who certified the numbers were never right. So we stayed out of Asia, and we're certainly not going to plunge a lot of money into Europe. And I think the safest place in right now in the world is North America.
Mm-hmm. Mm-hmm. Yeah, but how do you believe that the deficit now in the U.S. will be handled, especially when they pump now 5 trillion, and this will create obviously inflation, and it has to be
Well,
balanced in a way.
well, me, Dean, and John are old enough to say when the deficit of the United States was 5 trillion, oh my God, what's going to happen? When it was 10 trillion, oh my God, what's going to happen? And then when Obama took it to 20 trillion, oh my God, what's going to happen? Well, where do you want to put your dollars? 94% of the world's currency is in the top 5 or top 6 countries. Now,
Yeah.
I'm not going to put it in the euro. I'm not going to put it into Asian currencies.
Yeah.
I think the trust is still in the United States dollar, and it'll work itself out. If you have $25 trillion in debt and you're paying less than 1% in interest, then it's much better than having 15 trillion paying 8%.
Yeah, but how do you believe that this growth, inflation, and deficit thing will be balanced?
Because like I said, been around for a long time. It has always worked itself out.
Yeah.
Between the G7, and I'll put on my other hat, being a little bit of a whatever. They play ping pong with each other.
Okay.
The G7, they represent 94% of the world's currency. They're not going to let anything happen. They're just playing ping pong with each other. Where else are you going to put the money? Where else are you going to put your wealth?
Okay, and let's go to energy, to the energy sector. As far as I understand, you have a very big exposure in energy. What is your?
So we have a very good. We have a very big practice in energy. We're in pipelines, we're in refining, we're a little bit of everything, and the United States of America went up to, I forget the height, I think it was 14 million barrels a day, that nobody ever thought we're going to get there. Well, I guess we annoyed the Saudis and we annoyed the Russians. And to my personal belief is that what was done a few months ago between the Saudis and the Russians was a planned deal. They planned to do what they did, bring the price of oil down, and hurt the United States markets. And the people on the inside in the energy business, it was one big game. And they took it down. I tell you, we buy a lot of crude oil every day. There was a point, in fact, where we bought tons of crude oil. You ready for the number? $3.50 a barrel. So you think our refining business did well on that?
The maths. Okay. Okay, Dean. I want to ask you about the food sector and having this visibility in the overall sector and in very big brand names. How do you see this crisis will affect this sector? Short term and long term.
By and large, I don't think, long term will have a lot of effect. Clearly, what we're seeing today is grocery stores are selling out. All food companies are doing very well. The food service, which is the restaurants at hotels, they're struggling a little bit to come back. It'll take them several months. But by and large, food companies, particularly branded businesses that like the brands we've had around the world, are just very proud, and I love to see them continue to succeed, whether it's in Europe with Premier and the champagne business, Perrier-Jouët and Mum and all of those. They continue to do quite well, and the outlets for grocery and brands are doing very well, as is private label, which has continued to grow. So I don't see a lot of change. Clearly, there's been a little pantry loading for a month or so, but I think in general, I think good momentum is going to continue globally around food consumption and food patterns and the products we make. The difference, of course, is today, and we have technology, and I was the subject of my talk at the Capital Link 2 years ago in Athens. Technology is redefining our lives, and Amazon deliveries, and Walmart, and all of the stores around the world. That is certainly a change, and I think we're going to see some of that maintain itself after this is over, as these Zoom conferences, which we're experiencing here. But by and large, I think consumption and food, and of course, we're seeing some gradual changes, looking for healthier products, less meat, less sugar. All of those trends will be trends that are going to continue, but they're trends that allow manufacturers to adjust their strategies and adjust their product lines. So I think the food sector will continue to be pretty healthy.
Yeah. John Catsimatidis, do you see a disruption in the distribution channels?
Well, you know, when you're dealing, the average supermarket, we've been in the supermarket business too long. We've been in it for 51 years. And all the product was coming into all our New York stores. The big problem was we never saw panic until the first few weeks. It would have been real panic if people, the consumer, felt there was a disruption. There was a disruption in various spots. So, you know, there was a disruption in pork products for a while. And nobody should forget that one of the biggest pork companies in the world is owned by the Chinese. They bought our friend out a few years ago. Who was that, Dean? They bought one of our friends out. Yes,
I recall, John. I'll think of it.
So you know what I said to my customers? I said, okay, so you won't eat pork, you'll eat steak. Or you don't eat pork, you'll eat chicken. You know, and people realized that the disruption was only in certain categories. Procter & Gamble was running behind on a lot of products. But we always had product. Maybe we didn't have Charmin toilet tissue and we had sandpaper toilet tissue, but we had product. And I think our federal government, that was their biggest fear, that there was going to be interruption of product, and that would really panic people.
John Calamos, I wanted to ask you, as a asset manager, I wanted to ask you, what about the real estate? How do you see commercial real estate? And if you would invest in real estate in the period to come? Because as far as I understand, Zoom technologies and distant working and all this stuff will affect the sector. What's your take on that?
Yeah, that's a interesting area right now, because as we come out of this, we don't know what the new normal is going to be. And what we're seeing now is that people are moving out of the downtown areas out into the suburbs and they don't want to be on the trains. They don't want to be on this. So there'll be it looks like a shift in real estate from that point of view. So some of the commercial property in the bigger cities are probably having some difficulties in here, and that's a problem. So it's a real you know, there's just not one item in real estate, as you know. It could be healthcare real estate, it's commercial, it's housing. Housing is going up quite a bit. The mortgages are very low, so housing is going up. So it's a very complex area, but we'll have to see what the new normal is and whether or not people will not move back to the city or not. That's big.
But as far as I understand, nowadays is the time of liquidity. I mean, there is a lot of liquidity around, and I don't understand where the market will go, towards real estate, towards the capital markets, towards startups and technology and other types of investments. Where do you see the market going?
Yeah, well, you're right about the liquidity. I think there's a chart out there that they started back in 1951 saying how much cash there was sitting on the sidelines.
Yeah.
This is the largest amount of cash sitting on the sidelines since 1951. So there's a lot of money on the sidelines, even with the markets doing very well in here. There's a lot of money on the sidelines because you had a lot of people bail out, but then get back in. So it's going to be, there is opportunities in there. And as the economy hopefully starts to get better, the markets are reflecting, a return back to normal here. So the valuations aren't very cheap in here. So it's a very much a stock picker's market in here. It's not just buying the market. You have to be very selective. Should you buy the airlines in here? Should you buy, all these cyclical companies and things like that?
Talking about airlines, what's your view?
Yeah. So what's that?
Talking about airlines, what is your view? Just give us
we buy the convertible bonds on airlines. American Airlines just issued a convertible. So we try and manage your risks there. So we'll buy that. But it's a difficult market. And as Dean pointed out, earlier, it's technology. That technology theme is not going away. So technology, we have some of those technology stocks. The NASDAQ just went over a new high.
Yeah.
So, and that theme is not going away. Technology is what's happening in here. The big companies are getting bigger. They're not going away. They're getting bigger. And that's a major investment theme going forward in here. So it's an interesting market because every sector, every dynamic, it's all different. Whether it's healthcare, we look at a lot of biotech companies in the healthcare area. Real estate, it's different areas of real estate.
Okay, let's take some questions from our audience. I'll keep the last for because I have a part that we want to discuss about Greece. But in the financial crisis of 2008 and 9, it took months for countries to take decisions and actions and how to support their economies and finally recover from this crisis. In the pandemic crisis, governments acted quickly, taking actions and decisions within 50 days. From your point of view, will this help the economies to recover? Will these actions be enough to support the economies, even if a second pandemic wave will hit them within the next months? This is from Dimitris Zafiris. So I think John is your.
Who was the question for?
Let's start with John Calamos, and then you can also share your views on that.
Well, I think as was said, we recovered in 08 and 09, but we didn't recover that fast, quite frankly. And so everything has to do in the environment we live in has to do with government policy. What made the U.S. economy the strongest economy in the world before the pandemic? It was government policy. Decrease in regulations that they don't talk about. We had a big decrease in regulation, which was very beneficial. And we got people coming back to work. We weren't paying people to vote for. We don't want to give people money to say, vote for me, I'll give you money.
With subsidies.
Yeah. And that's what's important going forward. And remember, that's what the markets are all about. The markets are trying to look forward to say, okay, what is if we look at the government policies we had in the 80s, decrease regulation, decrease taxes, get people working again. And people working again are providing income. And that's what we need going forward. So looking forward through that, I hope that's kind of where we go, but we'll have to see. And that's the uncertainty that's out there right now.
John Catsimatidis, what's your political view on this issue?
Not
only the business view, but also the political.
On which particular issue? I'm sorry, I lost track.
Yeah, your political view on the issue. The issue is the countries, and especially the American government, took measures very late in the crisis of 2008, but now governments in the US and in Europe took very fast measures in order to tackle the crisis of COVID. So,
Well, you know, the markets are driven by two things, by fear and greed. Now, we can walk around and say, okay, we had the virus, and then we have a different problem in the United States. The extreme left wing is stirring the pot in our top 20 Democratic cities. And you have to realize something. I don't play Democrats or Republican games, but all 20 cities that are having problems, they just happen to be Democratic. And it's just, you know, so then we have a major election in November. So the question is, and we joke around amongst friends, well, what's going to be next? And is an asteroid going to come hit us? There was one author in Washington that said, oh, the Chinese have, you know, we had the virus number 19. Well, they're getting ready for virus number 20. You can't live in fear, and you got to run your business. You got to run your life, not living in fear. And again, I say the United States is the safest place. Europe, I'm very much concerned about, because with its open borders, and I realized they closed the borders a little bit, and that was the problem with the United Kingdom. The purpose for Brexit is they wanted to stop being invaded by outsiders. They wanted Britain to be British, and nobody says that out loud, but that is the truth. I want Greece to be Greek. I want Italy to be Italian. I want France to be French. And you have to avoid those invasions. And with the United States, with all the Central Americans invading us from South America and Central America through our borders, now that President Trump has stopped that, I feel that, you know, we're better off and we're protecting our own.
So finally, will you tell us if you're going to run for mayor?
Well, you know, New York City, we have a lot of problems. A long way of 20 years. We're considering it, but we haven't made any final decisions.
Okay, all right, understood. So, Dean, you know, apart from being Americans, you are Greek Americans of Greek origin.
Yes.
So, how do you see Greece for investments? And what do you believe are the three things that you would propose to Greece in order to incentivize foreign investors to invest in the countries and create growth?
Several things. I think those are good questions. And I think Greece does has potential, both in energy, tourism, of course. The whole development there at the old airport, I think, would be a wonderful thing. The investments that were made in Piraeus. I think a few years ago, I recall that we all had a meeting there, and Clinton came in, and we met with the president, the premier, and he said, put out the red carpet, not the red tape. And that's an important consideration, because the few things that we have looked at, part of the challenge for us is the size, the critical size is not sufficient to justify, but then there's a lot of concerns along the way. The union issues, some of the regulatory issues are very difficult to deal with. And so I think integrity, openness, I think the new regime is doing an excellent job. I always like to think Greeks, as we are all Greeks, we are very dynamic. We are very bright. We're very articulate. We have great work ethic and good culture. So I think we can be very special, just like the Israeli community. But I think there's a lot we can do to attract investment, to attract research and development, as I mentioned a couple of years ago, the amount of research and development that Israel does for companies around the world and here in the US, they convert a lot of their deficits to the US into payments for research and development, scientists. So I do think, I think Greece is a very bright nation, and I think we have a lot of opportunities. But I do think we have to have the work ethic and the red carpet versus the red tape is an important consideration. But I think with the new premier, we're doing a very good job, generally.
John Calamos?
Yes, I agree with that. I noticed that that there has been a decrease in regulation. I remember, Dean, when we were there, somebody tried to set up a coffee shop in Athens. It took them a year and a half to get a license for a coffee shop.
Well, things are substantially better now.
Yes. And that's what it's all about. It's about the policy.
Yeah.
There's too much emphasis on personalities. It's about the policy. Let's make it so people, the young people they're starting companies. We see that here. Young people they have a great idea and they start a company and they become successful. And one of the big things here in the U.S. that we shouldn't forget, and remember, my father was an immigrant here to the United States. What did we do differently? We accepted the values of the U.S., and that's really important. We didn't want to change, and we wanted the freedom to work. It's all about the freedom to be able to, to take your idea and create a company, as Dean points out, the way they do it in Israel and here in the U.S. So Greece needs to keep going down that road, and I think if they do, they can be successful.
Yeah, and John, would you invest, John Catsimatidis, would you invest in Greece, or would you consider an investment in the country?
I love Greece. I was born in Greece.
I know.
I've tried several times to make significant investments. And I think the new government that we have, Mitsotakis, he's a businessman. He's well educated, and he knows that Greece has to do more business and attract foreign investment. So I think there's positive things happening for Greece, and I love to try to make an additional investment.
And what sectors would be of interest for you?
Well, we're in a lot of sectors. We're in energy. We're in the investment, like Dean Metropoulos, and we're in the investment business.
Investment business.
Show me a good deal, and me, Dean, and John will go in it together.
Yes.
Okay. That's a good point. That's a good point. So maybe one last question with regards to U.S. current politics and the situation in the country. As I understand, Biden is leading the polls right now. And how do you see the impact of a win, of Biden's win in the elections in the economy, the real economy in the U.S.? And do you take any hedgings in your strategy, John Calamos?
Again, it's not about the person, it's about the policies.
Yeah,
what are the policies he's going to do? If he comes in and raises taxes and increases regulation, the economy is going to go the other way. So it's really about that. We do not want to become, in my opinion, we don't want to become socialists. We don't want the government running everything. It hasn't worked anywhere in the world. I don't understand why other countries don't see that we can't have the government running everything. The government is the referee, not the person running everything. We want everything to be fair. That's the government's job. It's not about running the businesses and doing that. And so that's what we don't know about, what Biden will do right here. And I'm hoping there'll be much more of a dialogue so people will understand that better going up to the election here.
John Catsimatidis?
Well, if the election in November is about performance, I think Donald Trump wins. If the election is about personality, Donald Trump loses. I know Donald Trump for 40 years, and he's got his own personality. He's got his own way of doing things. But he's the only one in of all our presidents that has stood up against Asia, stood up against China, stood up against North Korea, stood up against Iran. And we had the most, a great economy until we got hit with the virus. And someday we'll find out what happened with that virus. Like I said, if it's based on performance, I think Mr. Trump wins.
Dean, what's your view with regards to the situation in November and going forward?
I'm probably a little more moderate than John and John. I've been a Republican all my life, very conservative, fiscally conservative. Entitlements and socialism are not in my bailiwick and my philosophy. On the other hand, I think there are some issues that we need to address, and the issue is the working class. Since 1972, if you see wage increases in the working class, they have lagged significantly inflation. Whereas the wealthy, the CEOs, the executives, I see board meetings that I attend, some board meetings. Everybody talks about executive compensations and talks about board compensation, but nobody talks about wage earners compensation, and they have fallen behind. It's not right. It's not appropriate in my mind. I think also, regulations are a problem. Entitlements are a problem. Socialism is a challenge. But I do think tax rates should incent investment, but at the same time, in my mind, I'm not sure you should be heading towards a $30 trillion deficit and moderate, not 40% taxes, not 36, but I hear ranges from the 21 to 28. That doesn't bother me because I think depends on what you do with the spending. Infrastructure is excellent. Entitlements are not so excellent. On the other hand, it seems to me that if a family's got sick people in it and you can't pay a medical bill, that's what the government is there to provide a net for them as well. So I'm pretty conservative generally, but I am not as clear in my position that we should be driving lower taxes at any price, and we should be controlling government spending. And part of the issue in our country too is we're divided, both from an income point of view, racial issues, and I think we need to try to address something that allows us to communicate a little more effectively as a nation, because it's very troubling to me.
Yeah. It's a cultural issue, which is, I think, very substantial now in the US, a very serious issue. Yeah. So, John Catsimatidis, any closing statement with regards to the post-COVID era and America going forward?
I am optimistic.
Just 2 minutes.
Pardon?
We have just 2 minutes.
Okay, I'm optimistic that the world is going to turn. The rest of our country is going to turn faster. New York City will turn slower.
Yeah.
I'm not going to the theater and sitting next to somebody I don't know. I'm not going to the movies sitting next to somebody I don't know. And I've been to too many restaurants already. I'm not accepting any restaurant invitation.
Gentlemen, thank you very much. It was a great discussion, very insightful, and we are really honored that we had all of you in our discussion, and we heard from your experience and your view with regards to the American economy and the global economy going forward after the COVID crisis. Thank you very much. I really appreciate your participation in our panel, and I give the floor to the Capital Link. Thank you very much.
Thank you.
Thank you. Thank you.